Well, it was hard not to notice the massive market sell-off today as investors are mulling dual threats from Ebola and Hong Kong. So what should you do with your investments? Here with how to negotiate this volatile market, United Advisors Chief Marketing Strategist Scott Martin. Scott, great to have you back. So 238 points on the Dow. This is like the third day of sell-offs. What do you do if you're an individual investor worried about your 401k?
Well, I think you sit tight, because if you've been doing what we've been telling you to do along the way, you probably didn't have that bad of a day. And certainly, Jerry, 238 in the Dow is a bad number unless red is your favorite color. But I'll tell you what, that's not really that big percentage-wise. It's around 1%. You know, the Dow has gotten so high over the years that really a big move like that is not really to be unexpected, considering we're coming into a year that's typically volatile. But, Jerry, along the lines of what you should be doing is continue that balanced allocation. We've been telling our clients all year, don't fear bonds, don't fear interest rates, and don't worry about stocks either, because both are going to work in concert, the bond being the shock absorber to your portfolio, and stocks still doing decently well on the year because earnings are growing.
Well, you bring up bonds, my friend, so I'm going to go right to Bill Gross. You say it's the end of the Star Mutual Fund manager. Bill Gross famously, I guess, leaving PIMCO, the company that he founded before he got fired, and a lot of assets, some $70 billion in assets flowing out of PIMCO as well. What are you telling your clients who own that total return bond fund?
Well, the funny thing is, a lot of clients do own that, Jerry, whether it's in their 401k or whether it's in their IRAs, because it's a ubiquitous fund. Guess what we're telling them, Jerry? This is probably the best thing to happen to the fund in the last 5 years. I know that sounds crazy, but I'll tell you why. You led into it. Bill Gross was a star fund manager who went out on some crazy moves, some which worked, some didn't, and the guy underperformed the market quite a bit as far as bonds go in the last 4 years. I think what happens with these star fund managers, Jerry, they fly too close to the sun sometimes, think they're immaculate, and get hurt. And that's not the kind of thing you want from a fund that you're counting on to give you stable, steady returns.
So buy, sell, or hold PIMCO total return?
I'm buying it. I'll tell you what, I don't totally dig the PR job they're doing. I don't quite believe this story, but I think the whole issue of teamwork, a couple of guys that they have stepping in there, Dan, the portfolio manager stepping in there, yeah, he's coming in. He's running a PIMCO income fund, by the way, behind the scenes, that's doing very well year to date. He's well equipped to do what Bill Gross did, and I think even better of a job.
Well, I think there may be more assets to come out of PIMCO and that specific fund. And my concern is, you know, they're going to have lots of redemptions. They're going to have to sell a ton of bonds out there. Does that create pressures on people who stay in the fund?
It does. Liquidations that are fast and furious on any fund is very tough. We saw it in some other big fund companies in the tech crash, and certainly in the crash of '08. You know, liquid markets are very key to some of these funds, Jerry, and that might be the short-term pain for the long-term gain, because remember, with a lot of these funds that have blown up in the past, one of the big issue was they got too big. You know, they couldn't move around as nimbly, and now with PIMCO total return dropping in size, that's going to allow them to move around a lot better than they did before, which could be good for the investor.
That's a painful way to get there. Before you go, I have to say what is probably a four-letter word to you, Alibaba. The shares are down. I know you hold them. This is an IPO that we warned our viewers about, because the IPO market is not the place for individual investors. You just get burned. The people who make money are typically insiders, friends of Wall Street, people who started the company, friends and family. So what do you say about Alibaba today? Are you a buyer or a seller?
The four-letter word response, Jerry, is ouch. But I'll tell you what, we aren't in too high. We're in around 90, which is okay. I'll tell you, though, I think long-term BABA is going to be okay, BABA, the symbol. But it's just like Facebook. It's like some of the other guys that have come out in the pharmaceutical space recently. After the IPO, they do slump a bit. But as you see with Facebook now, up over 50% off its IPO price. So I'm not too concerned. But short-term, the scariness in Hong Kong is certainly affecting the stock.
No, it sure is. And, you know, we'll be continuing to talk about that in tonight's show. Scott, thanks for coming on, giving us some words of advice. Stay the course. Thank you.
Good to see you.